Hi, and welcome again to another edition of Market Analysis for today, January 27th, 2023. I'm Giovanni Benecourt, analyst, trader, and educator with Vantage Markets. Well, the chances of a soft landing are improving, at least the market certainly thinks so. The Federal Reserve preferred measure of inflation rose 4.4 annually in December, down from 4.7% in November. The latest sign that the era of red hot prices is coming to an end and that the Fed may soon pivot to a less aggressive monetary policy stance. The so-called headline PCE deflator, which includes food and energy prices, declined to 5% in December from 5.5% in November. Further evidence of cooling inflation. The fourth quarter GDP report was strong enough to allay long-standing recession fears, with the U.S. economy growing at a stronger than expected annual rate of 2.9%. But under the surface, it painted a picture of underlying economic weakness, which helped preserve the expectation that the Federal Reserve's aggressive rate hiking strategy may soon conclude. It also pointed to slowing inflation, another factor being closely watched by the Fed ahead of its meeting next week. That was enough to send the S&P 500 to a 7-week high and push the Nasdaq 2023 gains to 10%. A closer look at the data, though, shows that a recession should perhaps not be discounted so quickly. For instance, much of the GDP strength came from the increases in private inventory investment, net exports, and government spending, all of which may not be sustainable. In fact, inventory building conclude be a reflection of consumers' demand slowing. Similarly, the durable goods report appears strong, with orders jumping 5.6% in December, but it was largely down to Boeing aircraft orders, excluding transportation orders, which fell 0.1%. Whether the U.S. can avoid a recession is one of the key unanswered questions facing markets this year. History suggests that if it can, stocks typically can rally after the Federal Reserve first cuts interest rates. On 6 occasions, that has happened since 1966. The S&P 500 has climbed an average of 12.7% after 6 months and 18% a year after, according to some data. Now, that is a big right now. That's a big if right now. So with that being said, let's take a look at what we can expect from market fluctuations today. Well, we're looking at that the market is really on a flat scenario as we speak. I have my resistance at 12,300 and change. That could be replaced at 12,200. Okay, if that's what we expect if the market continues to rally. A pullback towards the 12,000 marker, it can be contemplated. I have my support at 11,800, which I was using as my resistance in previous movements. Then we have the S&P. I have 4,100 as my resistance and 4,000 as my support. It's trading right between that. A pullback towards 4,000 can be contemplated, but another ride to the upside after the market opens can also be seen. Right now, I'm just looking. I'm waiting for the market to show me that direction. The Dow, however, is the one that is looking to sustain its momentum to the upside so far, trading right around 34,000. I have 34,500 as my resistance. 33,800 is my support. Could we come close down towards it? It could be the 21 moving average is kind of flatlining as the same as the RSI. But both of them, at least at the RSI, is far away from being entering in the overbought scenario. As far as crude oil goes, $82 was a market that we've been contemplating for so long. It has been met as a resistance. We could call that a triple top, 1, 2, and 3. So we will see any continuation to the upside. Let's see, that could be contemplated if we see some pullback on the dollar index. But with the data that we received today, I don't think so. As far as Nat Gas, why has Nat Gas been on a tear to the downside all this year? We remember that last year when the war began, Ukraine and Russia being one of the biggest exporters of Nat Gas to the obviously to the European Union, we could probably see that today, now, all of the supply chain of natural gas to Europe has been met. The U.S. being one of the most biggest suppliers of natural gas to the European Union. So also we contemplate that in Europe the winter was not as cold as they contemplate as before. So that was also one of the reasons that Nat Gas has been pushing lower. The same token in the U.S., the supply was way higher than the demand. In the U.S., they were not using that much of natural gas to heat up their homes, so they were oversupplied. A lot of inventories were in natural gas. So we could contemplate a continuation to the downside towards our $250 support level. Breaking that support, I'm looking at nat gas to perhaps come down towards $2 into a $1 marker. So, and we have seen that before. And now let's take a look at gold. Gold, after yesterday's information, that it did push back very strongly down to 1920, which it was a previous support level, resistance, now support. So we could probably contemplate that gold will continue with that movement towards the downside 1900. We will find support here, or we will find support at 1920. Let's just wait and see. The RSI is in a neutral zone, so we could probably contemplate a push lower on gold before it could continue to see if it takes out the 1950 resistance level. Then we have silver, which is really pushing lower. We could probably contemplate silver coming down towards $23. That could be a scenario. Then we have here copper. Copper is looking to trade towards the 420 level. That could be a scenario after it has been traded up to the 430. It hasn't really been able to climb back up to that level, but a nice pullback, profit taking, or just a continuation of this ranging consolidation, horizontal movement, lateral movement. It has created a channel, a box for us to come and see where it could come out and break out of. We could grab all the lows, okay, and say, okay, 420 could be that breakout to the downside, right? Then $4.10 could be a support. I have $4.15 as my support, since the 21 moving average is coming closer to it. But let's wait and see what happens. Now, then we have the euro. Euro is looking to is really pushing back. It's falling or retracing from a nice pop over above 109. It's back below 109, the 108.5 50 cents marker. So let's see if that will continue to push lower to 108 marker. As far as the pound goes, I also see the pound moving lower to 123 because the dollar index is steadily appreciating itself. I have the 102 resistance, psychological resistance on the dollar index, and see if that will be met. So if that's met, obviously we'll see some continuation down, pulled down on gold, silver, copper, also crude oil. Okay, well, that's it for me right now. I wish you a fantastic, nice weekend, and I will see you next week. Don't forget that next month we'll be doing live sessions. Okay, all right. Have a nice weekend. See you.